Okay, Assalamualaikum warahmatullahi wabarakatuh and good afternoon. Yeah. So actually this is not a planned class, right? I don't know, I Dr. Sa woke up in the morning and asked if there is any class today. So I think that what we can do, maybe we can have just a revision for your final exam. So for the revision class, all right, do not expect that I will give you the question, all right? So many of my students are actually very frustrated because they don't actually get so much tips for the exam questions. But what I will share is that only on the coverage, yeah. What are the topics to be included in the final exam? I was informed that your exam will be on the 30th of July, which is about next week, isn't it? Just before the students get to school. Okay, so I have listed down that there will be the following topics, all right, covered in your final exam. One is your tax computation, which I don't actually do this topic with you, right? And then we have tax incentive, where look into pioneer status, investment tax allowance, and reinvestment allowance. Then you have the RPGT. There are a lot of things under RPGT. All right, many scenarios, many circumstances. So you have to understand for each circumstances, what would be the AP and the disposal price. Under indirect taxes, as by Dr. Salwa, I believe that she went through the GST as well. And then we also have went through the SST, the evolution of the indirect taxes in Malaysia. And of course, you also have to know, I think there's a framework guidelines from the custom, right, that you have to understand. Then the final topic is again the one that I'm not covering, right, is the agricultural allowance. Yeah. So these are the 5 topics that will be in your final exam. I believe that the exam will take about 3 hours, all right, for you to answer. 5 questions, there's a lot actually, yeah. Normally we only have 4 questions, but maybe because I don't know, that's the coverage that we are supposed to do in the final here. All right, okay. Question before we go into the details. How are you doing actually? You are now, when's the first day of paper?
5th
8th
June,
of
5th
July.
July. Ah,
Today is 3rd, so you have 5 more
yeah,
days
third.
lah. Okay, so I wish you all the best, yeah, for all the papers that you're sitting on. All right, so for tax computation, the first topic, all right, I know that I have not covered this topic, but I just want to share with you. The question is always similar. The format of the question is always similar to all the questions on this topic. Yeah, but it's just that the type of expenses tested, all right, the tax treatment for each expenses would be different. All right. So number one is that regard to the tax computation, you must be very clear about your format. All right, means that starting from section 4A, adjusted income, statutory income, your loss brought forward, what else? And then you add your other income from your section 4C, 4D, right? Then you have your aggregate income minus your current year loss, minus your approved donation. And remember that is restricted to 10%. Then minus your zakat, business zakat, which is maximum 2.5% of your aggregate income. Then you get to your total income, which is also your chargeable income. And most of the question will ask for a chargeable income. Very unlikely question ask for tax liability. Yeah. So you only have to compute the chargeable income. Um, so okay, and then talking about income and expenses, right? So you have to understand that income here, we have many types of income. Mungkin nak menconteng. Okay. So of course you are given the profit and loss account. Or do you need the revision on this topic or not? Otherwise, I can just skip to the other topic. Or which one? Or you want to put a priority? Which topic that you want me to revise first? I will follow your request. Come on.
All doctor.
You all memang opportunist betul lah. Okay, never mind. I will do my very best. Yeah, I'm not saying that I hope that you gain some a better understanding of this revision class. Okay, all right. So when talking about, of course, you are given the statement of comprehensive statement of comprehensive income or profit and loss account, right? So what normally do is that you do have the income minus expenses. Okay, so you come to your profit before tax. So for the exam purpose, whether it's your exam or even in the professional exam, they will always start with profit before tax, right? So you will have to start from this. So when you start from this, you have to understand the concept that in arriving to profit before tax, you have added income and you have minus your expenses, right? Whatever income that you have, you add it together minus all these expenses. But you must also understand that, right? For income tax purpose, right? Whatever income that you have here could be taxable income. All right, income which is taxable, it means that it has to be. So whatever income is an income under section 4A to 4F lah. Right, it could be a business income, it could be dividend income, it could be let me check this one, stop sharing lah kan, so that you can see this clearer, isn't it? Next time remind, okay? Okay, so income here means that income from your business, income from your dividend, income from your rental, and business can also have business one, business two, right? So the income here could be taxable, or you can also have non-taxable income. Non-taxable income means that income which is not subject to tax. How do you know that income is not taxable? It doesn't fall into 4A to 4F. Yeah. So when the income does not fall into 4A to 4F means that the income is non-taxable. Right? So but the problem is that hold on, I takut video tu jatuh, and awak naik ni sikit. Okay. The problem is that, all right, all this income is included in your SOKI. Right? So when you want to compute income tax, you have to follow the law under Income Tax Act. So the law says that, okay, you must compute for A first. Come to adjusted income, statutory income, aggregate income. So there is a flow of method or the format for you to follow, right? Then only you come to your chargeable income. It's not simply as PBT times by 28 or 24%, yeah? All right. So when you have this taxable and non-taxable income, you have to understand that the formula, all right, you must come with the section 4A first. Adjusted income from your section 4A, and then statutory income from section 4A, which is your business income. So whenever you have many types of income in your SOKI, all right, then you have to do adjustment, right? It means that if you have section 4A here, you have section 4C, you have section 4D, means that you can have your business income, sales, for example. You can have your dividend income, interest income, or even your rental income here. All right. You only want to have your section 4A in your adjusted income. Right. So since you start from PBT, then you have to minus. Since you have added, all right, your non-business income. So this one is what we call non-business income. Right, non-business income, and sometimes they call it as an investment income. Yeah, this one is also known as investment income. So once you have this, all right, it's already included in the income here. So you have to adjust because you want only have to have income of section 4A. So in that case, you have added here. So what you do is that you minus your 4C and your 4D income. Right, starting from PBT, whatever income is taxable, but you want to take it out first because you want to compute for A only. You want to leave A there. But C and D, take it out first because why? The law or the format for your tax com, 4C and 4D will be at the bottom. Right? It will be taxable, but it will be at the bottom. Okay. Some students, cause let's say that for your income here section, your dividend is 100,000, let's say, all right, dividend of 100,000. In your SOKI, all right, you have dividend income of 100,000. Whether the income is exempted from income tax perspective, all right, or whether the income is not a receipt, for example, all right, you just want to take out everything from your PBT here, right? Take out your 4C, 4D, and later when you do your 4C, 4D, then only you think, whether the income is exempted or whether the income is final, or whether the income, you have to compute the adjusted income, for example, in the case of rental, all right? So all that you do the computation at the bottom. But what you want to do first is that take out everything in the SOCI. So if in the SOCI you have dividend of 100,000, you take out 100,000. Whether the dividend is exempted or final, then you deal that later when you do section 4C under dividend income. Similarly, for your interest income, even though it's a foreign income or it's exempted, but take it out first, then later when you do your 4C only, then you put it as exempted if it's a foreign source income. Right? Do you get that? So I hope that is clear on it. Okay, we also have this non-taxable income. So non-taxable income means that income which is not subject to tax. So if it's already included in your income here, included in your PBT, of course you want to take it out, right? Because you do not want to pay tax on your non-taxable income. So how you take out, of course, again, income you add in, arriving to PBT. Then what you do is that you minus your non-taxable income. Example of non-taxable income, you have those capital gains, right? For example, you have gain on disposal of its asset, gain of your motor vehicle. What is that? Ooh, huh? Wow. See, my son kata, mana nak tunjuk kat you all ni? Jumpa cincin dalam I punya laundry. Mysterious tak? Siapa punya cincin ni? Of course, saya tak muat untuk tangan I. Tak apa ya. No, it cannot be Abah. See? But it's very beautiful. Okay, Abang simpan ni. I think that is silver, right? But cannot. I'm too... No, the ring is too small for me. Okay, go back. Okay. It's not that my finger is too big. All right, where were we? All right, so you non-taxable income, for example, you have a gain on disposal of its asset. Yeah, for example, disposal of your motor vehicle, disposal. So whenever in the notes to the account there is a disposal, right? You have to treat that disposal as capital gain. But of course, at the same time, when there's a disposal of asset, of course, you have to compute the balancing charge and balancing allowance. So that one, it will be a separate computation, and that will appear in arriving to your statutory income. Yeah, so careful with that. So non-taxable income. I remember that, okay, for example, students are confused. All right, okay, you have shares in a company, right? When you have shares in a company, all right, the income from the shares is what we call dividend. And that dividend income is taxable under section 4C. All right, of course, whether you have a final or exempted, that's different issues, but it's taxable. All right, the exemption is given later. Right. What else do I say? Okay, for example, you have a rental income. All right, you have a property, then you rented out the property, you will have your rental income, which is subject under tax under section 4D. All right, so the rental income is taxable. But if you dispose of your property, the source of income, for example, you dispose of your shares, you dispose of the properties, so the gain on the disposal is a capital gain, which is not taxable, right, under income tax. But of course, we talk about property, the tax on the RPGT, so it's a different income, different tax law. Yeah, so we're talking about income tax here. So be clear about the income, which is capital gain, and normally you have to understand the source of income and the income itself. Yeah, income generated from the source. So that is the income which is taxable on non-taxable. Then that will be your treatment. Take out your 4C, take out your 4D, and take out your non-taxable income. And remember that this one, 4C and 4D, later in your tax computation, you have your other income. All right, you add on under other income. Yeah, don't forget your 4C and 4D here. So your 4C could be from your dividend, interest, and your 4D rental income. Right, very rare that you have royalty income for companies. All right, so far not yet tested. Okay, next is the expenses, which is a very, it's more challenging to, okay, because I didn't teach you before. All right, it's what I'm sharing with you, same as your lecturer. Kan salah bagi ilmu kan? Is it the same or not? Expenses here. Now we go into expenses. When talk about expense, remember expense has been deducted in arriving to PBT, right? So under these expenses, normally it's a long list of expenses. So we have under expenses, we have expense which is allowable. Allowable expense which is under section 33 and section 34. All right, 33 means that expenses incurred wholly, exclusively, expenses or outgoing, right? Expenses incurred wholly exclusively in the production of the income, right? Section 34 means that they give you list of expenses that you must know, right? You must make the list of section 34 items so that you know that when you come across any kind of that expense, you know that is allowable under section 34. All right, if I say that why is it allowable, it's capital because section 34 says so. All right, you don't have to argue on that. And then all these expenses, you also have the non-allowable expense. For example, non-business expense, of course, which is not under section 33, or it could also be non-outgoing. So that's why you have the provision, right? You have the depreciation, right? Sometimes you have the amortization. All these are non-cash, right? Amortization. I don't know whether you can read this or not. Amortization, okay? Provision accounts, depreciation accounts, amortization. All right. You also have expenses which is not allowed under section 39. Very important, right? So you must know what are the expenses which is not allowed. For example, domestic expenses or expenses which is not incurred for the purpose of that income. All right. So when say that income not exclusively incurred, so if you have income here, you have section 4A. At the same time, you also have section income from your 4D rental. So the expenses related to which is allowable is only section 4A expense. Any expenses related to 4D is not allowed to be set off against 4A income. So that's why you have to add back. Right? You add back expenses which is not 4A expense, then you deduct against that income at the bottom. For example, you do have quick rent and assessment, right, for your rented properties that you receive 4D. Right, income 4D you assess at the bottom, but any expenses related to the rented property will also be, all right, adjusted so that it will be deducted against your rental income. So whenever you have this non-allowable expense, remember that this expense not allowed, it means that the law say you cannot deduct these expenses, but because you start from PBT, you already have deducted all these expenses. So you have to do adjustment, right? So when you do adjustment, whatever you have deducted, which is not supposed to, right? That's why you have to add back those not allowable expenses. Allowable expense means that you have deducted. The law say, okay, you can deduct. So that's why you don't have to do anything, but you have to write nil. Means there is no adjustment for that kind of expenses. And remember, when you answer your corporate tax question, all right, every items in the notes must appear in your answer. So it means that maybe you have the SOCI and then you give note number 1. It's talk about, oh, never mind. Note number 1 talk about, example, cost of sales, right? Cost of sales, then you say that, okay, under cost of sales, you have depreciation, and then you have provision for stock, right? So you have all these items, all right, mentioned in the notes must appear in your answer. So I suggest that when you do your answer, if you do note number 1, then you write note number 1 in your answer. Okay, what are the things? Okay, item 1, line 1, line 2, line 3. Depending on the notes, all right, that you have. The information in the notes must appear again in the tax treatment in your answer. Yeah. Okay, so you have non-allowable expense, then you have to add back. All right, if you, for example, in this case, it's a depreciation, then you have to add back now how much is the depreciation, provision accounts, provision for stock. Okay, you also must add back. Okay, and of course, you have to look at the provision. There's a under section 34. There's a specific provision which is allowed. Other than that, it's not allowed. Okay. Then you have expenses which you can claim double deduction. So when you talk about double deduction, means that you can claim that expense double. You can claim you have deducted one time here, but you also deduct one more time in arriving to your adjusted income. So the same expense you claim twice, right? That's why it's number double deduction. And then you go straight to your adjusted income plus balancing charge, capital allowance. All right, remember capital allowance, sometimes you have to compute the capital allowance for the year, right? And then especially if you have any capital expenses right here that you incurred, right, that you can claim actually capital allowance, then you have to do adjustment in your capital allowance computation. Okay, what else? Any question on this? Otherwise, I will stop on your corporate tax.
Doktor, bawa depreciation tu apa?
Amortization. Amortization tak nampak?
Mau
Amortize.
buat macam analisis.
So, siapa yang datang kelas je boleh faham. Okay, anything else? So you are clear about your corporate tax. Actually, corporate tax is very easy for you to score. Alright, dia punya tick. I think about one question can be about 60 ticks. Because why? Every item in the notes must appear in your answer. Alright, whether there's no adjustment, you have to put a nil. So satu tick untuk nil. Right, and then of course plus minus tu another example lah. And of course, I cannot go through with every type of expenses. It will take years. All right, to go through every type of expenses. But the one that is very common, for example, EPF, 19%. All right, anything above 19% is not allowed, so you have to add back. Entertainment expenses, you have to know which one you can claim 50%, which one is 100%. What else? Entertainment, lease rental. All right, if you have lease rental of motor vehicle, then motor vehicle, is it a passenger car or commercial car? So the law says so that commercial car, no problem, everything is allowed. But if a passenger car, then you have to look at the cost. Is it 150,000 or less than 150,000? If 150,000 or more, then you say that, okay, lease rental allowed for the periods. All right, it means that from the period, it means that you're allowed for the company to claim it's only 50,000. So you have to start from the first day of the leasing until your year of assessment. How much have you claimed? Should you claim more in the year, or you have to add back? All right, if anything more than 50,000, you have to add back for that year. Right, and remember that 50,000 is for the whole periods of leasing, not only for that year of assessment. Similarly, if below 150,000, you can claim up to 100,000. So sometimes you have to do computation for your lease rental. I think that if you understand the lease rental, all right, it's also normally because the things is small because you have to do some workings to decide how much is the allowable amount for the lease rental for the year, right? So show your workings on separate paper so that you don't, right? Kalau ada working, student tak show working, I don't know whether I want to give. With the online lah lagi lah kan, you tiru ke apa, I don't know. Okay, expenses, forex, all right? Remember forex, you have gain or loss on whether it's realized or unrealized, all that lah. So this topic itself is revision pun memang satu hari. Okay, any more you want to ask on this topic? Sebenarnya you all tak faham kat mana? Where you cannot score actually? Boleh score lah tu.
Tajuk ni, doktor.
Ha? Apa?
Tajuk ni, doktor.
Tajuk ni you tak score? Ish, you ni. Kalau I student, I pun actually, yelah. I don't know how to explain further lah, right? If you have any problem, you can always WhatsApp me lah. Alright, WhatsApp in the class. I prefer you, if you have question, you WhatsApp in the class group, because why? When you ask question, other student will also learn. And when I answer your question, alright, other student will also benefit lah. Rather than you personal message me and then I have to answer and then other student ask me the same question. Alright, so why not we share the knowledge in the WhatsApp group, yeah? Next is, what was the topic? Next topic? RPGT. Oh, tax incentive or RPGT?
RPGT.
Okay, RPGT. RPGT, it could be very straightforward or it could be very challenging. Yeah, RPGT. But of course, there are many scenarios. It could be a normal one. Whatever you know, you must know what is your AP and what is your disposal price. Right, at the end of the day, it's AP and DP. Then you have your chargeable gain, then whether you have exemption, whether you have losses, all that comes later by your AP and your DP in many scenarios. All right. Under normal scenario, you know AP is whatever cost incurred in acquiring the property plus incidental cost minus capital gains. Give me example of your capital receipts under acquisition price. Hmm. What is your capital receipts under acquisition price? Sebab tak study lagi lah. Right. Example, when you have your capital deposit forfeited, when you receive your compensation, all right. So all this income is deducted in arriving to your acquisition price. All right. So you have to understand, remember that the AP and DP is a statutory definition. So you have to follow the definition, how to get to AP and how to get to DDP. Right. All right. And then, of course, you have issues of losses, right? You have losses. And then loss here are the two types of losses, loss, relief, right? And then you also have your allowable loss. So you should know how to make use of these losses, all right? Given a question, maybe you have both loss relief and allowable loss. So you should know how to actually apply the knowledge in the tax computation, right? Because loss relief is deducted against the RPGT payable, allowable loss is deducted against your chargeable gain. Yeah. So chargeable gain minus exemption, then only minus allowable loss. So any loss which is not fully utilized, you can always carry forward. Yeah. Okay. And then of course we do have scenario. For example, when you have inter vivo. Yeah. Inter vivos. So these inter vivos, it means that whenever there's a transfer of property from one person to another and happen that the transferer is between immediate family, all right, it means that it's from husband and wife, from parents to children, or from parents from grandparents to grandchildren. So all these fall under inter vivo. So when you have inter vivo, then you have to know to the, we call it as a, it's not disposal, what do you call it, the donor, right? The donor and the recipient. So you the term is donor because donate you don't get anything, because inter vivo is what we call, it's a gift, right? So donor don't get anything, so you just give the property to the recipient. So to the donor, all right, you must understand there could be a no gain no loss situation. All right, so no gain no loss means that acquisition price equals to disposal price, but may also be that the disposal is at market value. So you have to check, all right, what are the conditions for you to get no gain no loss. Otherwise you have to go for market value. And to the recipient, you must know that you recipient don't have to pay anything to the disposer, in this case to the donor, because it was gift, all right, received by him or her. So in this case, there's no AP paid by the recipient. But for income tax purpose, RPGT, all right, you under inter vivo here, R is deemed to acquire the asset at the AP plus permitted expenses of donor. Right? AP, acquisition price, whatever incurred by the donor, acquisition price, and then plus PE. All right, PE, permitted expenses here is what? For example, there is a renovation. All right, expenses that increase the value of the property, right? Or we talk about the title, right? So maybe not renovation, kita tak panggil renovation lah, kita panggil increase the value, right? Whatever expenses incurred to increase the value of the properties, or you to preserve the title of the property. So this is what we call the PE. So any renovation is here lah, all right? Whenever you have renovation, or whenever you have any expenses incurred for that property after the during this period, right? Donors, right? Talking about the donors. So then would be the acquisition price of the recipient. Okay. Then we also have the case whereby an individual transfer property to a company, right? So whenever an individual transfer property to a company, then again to the individual, And in this case, company must be company owned by him or by the spouse or family members, right? So in that case, any transfer of property is a no gain, no loss to the disposer, right? And to the company, you might also know what will be the acquisition price of the company, right? And that situation can only happen when the disposal of the property, in return, you get shares from the company, and the value of the shares at least 85% of your disposal of the properties value. Yeah. So if you have that, then the shares that you get is also what we call real property shares, and the disposal of that shares subject to RPGT. So when you have that, all right, you really have to go back. What would be the action price of the shares, and then decide also what is the disposal price of the shares. Then you know how much is the tax RPGT on the shares upon disposal. Okay. And of course, you have other exemptions, all right, under RPGT. For example, when company transfer property from one company to another because of merger or because of the restructuring, all that, all right, you will also get exemption, right? That exemption, and then exemption means that you don't have to pay tax, all right, on the transfer of the property. Okay, there are three scenarios under company. And then you also have the last part, for example, a deceased person, right, pass away. How would be the, what would be the, is there any tax imposed on the deceased person, right? For example, in this case, deceased person is a no gain, no loss. But to the acquirer or to the beneficiaries, you have to see how much is the acquisition price of the properties he received from the inheritance. Yeah, so all this thing is on the, there's a page on that lah. So you can actually do a summary. We get to the action price and disposal price under each scenario. Yeah, in terms of the administration, both disposer and acquirer has responsibilities to submit the RPGT form to Inland Revenue Board within 60 days, right? And on top of that, we have disposer and the acquirer, right? Acquirer must pay 3% of the disposal price to Inland Revenue Board. All right, we call that amount as a, we have to remit, what do you call that amount? Stop withholding tax. Benda nama dia. Alright, 3% of the disposal price paid to Inland Revenue Board. Right, so it means that RB actually has collected tax in advance before it's being assessed. And RPGT is not like Income Tax Act. Alright, RPGT is not under self-assessment system. So what you can do is that you don't have to compute your RPGT. Right, what normally do is that you have to provide all the documents to the RPGT. But in my case, alright, I would do the computation myself so that I am aware of the how much is the RPGT which is supposed to be paid by whether the disposer or the buyer or the acquirer lah. So also I also know that how much is the 3% that I have to pay to RB. Right, of course, nowadays all agents are actually doing that. But if you can understand the process, you can understand how it is actually being computed, right, you will feel happier, more satisfied with the transaction. Okay. Any question on RPGT?
Doctor,
Yes.
I want to ask about tax treatment for rented properties in respect of RPGT, because if you look at the definition of RPGT, right, it includes interest, option, or other rights over such land. So does it mean that if I dispose leasehold land or other rented properties, who have to pay the RPGT, whether the lessor or the lessee?
Okay. We're talking about lessor, lessee here. You are not owner of the property, isn't it?
The owner is the lessor.
Lessor.
Right.
So the
Yeah.
disposer must be the lessor. So the owner of the leased property is the lessor. Disposer
But
of,
then, yeah, there's another concept called relevant interest, right? Because I read somewhere, but I'm not sure about this.
alright. That one is more on the tax law punya definition, all that lah. But what I've been teaching you is actually a very basic one. right? You're understanding that if you own the property, all right, the property is in Malaysia, then it's subject to RPGT. Whether there's a interest in that, then you have to do further lah, right? The understanding on that is further. Talking about whether property is on lease, all right, lease means that you do not own the property, right? Even the lessor, right? Lessor is the owner. As a lessee, in this case, you're talking about rented property, and that property is on lease, right? So it's different. Just like this lah. Uh, uh, it could be like this. I purchase a property from a developer, right? I'm not sure whether this example will suit your question lah. But when I say that property, when you buy property, of course you don't pay cash, right? Nobody wants to pay cash on property, because once you pay property by cash, inland revenue board will immediately come to you. Even though people have cash to buy property, they won't do it. Why? Because RB will ask you where the money comes from, right? And then you have to show. Of course, if you have the money, no problem. But it's hassle, right? Because you have to show where the money comes from, all the bank statement, all that. Nah. So normally, when people want to buy a property, they will go for bank loan, all right? So when you think about bank loan, and normally it's a very long period, right? The property, because it appreciates in value, bank is willing to give 30 years loan. Now goes to your age 30, 70 years old, right? So if you take up loan earlier, you can go up to 40 years nah. Yeah. So means that why bank wants to give loan to you, all right? And normally it's 90-10, means that the bank will finance 90% of the properties. You only have to pay 10% when you want to buy. And of course, later you have to pay to the bank. So when the property is on loan, so it means that you are not the owner yet. All right. And when you dispose of the property, during means that the property has not been transferred to you. But remember, you have paid certain amount of money on that property. So when you dispose of the money, you have to settle a few things. All right. And of course, RPGT, whether subject or not, yes, you are still subject to RPGT. But whatever amount, all right, for example, it doesn't matter, because you're still the owner of the property, right? When you have to pay for the RPGT, all right, is based on how much is the disposal price and how much is the acquisition price. All right, and whatever disposal price that you get, you have to pay part of it to the bank to settle your bank loan, right? So in this case, you are not talking about lessee and lessor, you're talking about bank loan, right? You owner that have not have full entitlement or full ownership of the property. Yeah. So but the case whether the bank, how much is your liability to bank is a different issue, but RPGT is a different issue, right? You are going to compare what is your acquisition price and disposal price of that property. I'm not sure whether that answer your question. Who asked just now?
Tamil.
Maybe not, yeah, because you're talking about lessor. And remember that whatever income that you get from the property is rental income. That is taxable under income tax. Yeah, it's two different matter. It's two different act. So income, rental income is tax under income tax act. So you have to do the computation lah. Income tax means that rental income minus all the allowable expenses, then you come to your adjusted rental income, then compute your tax liability from there. Assuming you do not have any other income. If you have any other income, then come to your aggregate income lah. Normal lah, computation. Yeah, so RPGT and income tax is two different acts. Okay, other question? For this topic, right, if you have a lot of interest in this topic, right, not only how to compute that, but it's actually more on the property investment, right? I will always urge my student, right, encourage my student to go, and if you have extra time, you can always, now with the online availability, right, you can always go for property investment courses, right? Don't pay yet now. You just go for the free ones, and then you go for many seafoods, learn from many seafoods, all right, the free ones, all right, then see how which one you actually have you're interested in. Then only if you are serious, then you can go for the paid courses, right? Because in order for you to invest even in the property or even in shares, whatever, you have to get the knowledge first, right? Rather than you just follow people, right? People do shares, you want to do shares, but you don't have the enough. Who's that? Aina, Aina, what do you want? Oh, that's why. You have to look in your room. Okay. All right. Next question on RPGT.
Doctor, I have another question.
Yes.
Executor is also exposed to RBGT, right?
Again,
Executor of the property also exposed to RBGT, right?
executor. Yes. If
Yeah.
there is a disposal of property by the executor, all right. Of course, executor will have to pay RPGT, whatever that you have. Right. If you have disposal of property, but again, the payment, everything is come from the estate, not the executor's money. He only manage.
Okay.
Yeah, even disposal by the executor subject to RPGT. Yes, but remember that nanti dia executor talking about deceased person, right? It's a no
Yes.
gain no loss, right? Because you actually dispose property of the deceased person. So when the deceased person, so in that case, it's a no gain no loss. Please check on that. So when it is a no gain no loss, it means that the deceased person don't have to pay anything on the disposal, but you still have to submit your written form, right? And then there's another one form because you are under no gain no loss, so you have to apply for that no gain no loss situation in terms of administration. Okay, next. Tak ada. Okay. Next topic is tax incentive. Okay. Under tax incentive, actually there are three main topics. You have the pioneer, you have the ITA, and then you have the RA. Okay. I did not cover RA, right? But I told you that you have to refer to the textbook for RA. Actually, the tax computation of RA is similar between ITA and RA. The difference is that this one is for promoted product or promoted activity. This one is for the purpose of modernization, and all right, there are criteria for you to apply for RA. And ITA here is 5 years, here is 15 years. Pioneer status, all right, remember that you have the non-pioneer and pioneer business, right? And then you have to see that the losses, you can have loss here, you can have loss here. So loss in the pioneer, loss from pioneer business can only set off against your 70% SI, the abated income. But loss from non-pioneer will first use against your abated income, balance only against your aggregate income. This one again abated only. Are you following? You know what I'm talking about?
Yes.
Yeah. All right. So this is the most important thing about the pioneer status. All right. No, most of the time we play around with the losses here. Okay. And then remember that under pioneer we also have the 30% deemed income. All right, which is always taxable no matter what lah. Right, you have the 30% deemed income. And the losses from pioneer, all right, there's a question. What if this loss, after 5 years, you still have loss from your pioneer business? Again, this loss will be set off against 70% of your, or against your SI, even after post-pioneer. And remember the loss can only be utilized for 7 years. Okay. Any question on pioneer? And whenever you talk about this tax incentive, later, all right, when you are required to compare, right, what you do is that you have your chargeable income, and then you have exempt account, and then you have losses. All right. Then if you were to compare between pioneer and ITA, you do that table. Then you put in lah under pioneer how much is the chargeable income for the 5 years period, yeah, or whatever period that you are given. If 3 years, then it's 3 years lah. So you compare total chargeable income of pioneer and ITA, how much the exempt income for the whole period, then you compare. All right, is there any losses carry forward available, to be set off against your future. So what you want to know is that if chargeable income, I want the lowest. Right, I want the lowest chargeable income. Exempt, I want the highest. Tak nak tulis ni lah. Chargeable income, you want the lowest. Exempt income, you want to have the highest, and here. So you compare lah. Sometimes it's like this. Okay. Exempt income pun this one is good. Alright, sini. So clearly you should go for pioneer status lah. Alright, but sometimes you have ITA here. Chargeable income ITA is lower, but pioneer give higher exempt account, and pioneer also have losses. So you have to show this table first, then only you justify which one is better, right? Then you give your some suggestion lah, right? Something which is logic, whether you should go. Or I say that, okay, in this case, I would go for pioneer. For example, I would go for pioneer because it gives me higher exempt income and I have losses that can be set off against my future income. Why is it so important about exempt income? Because you can declare tax exempt dividend at 2-tier level, right? Chargeable income, never mind, because you have to focus on what is better for the company lah. So you can highlight these two, even though chargeable income is higher under ITA, under pioneer, but the exempt and loss is higher. I cakap apa ni tadi lah? Baiklah. Okay. So at the end, when you compare pioneer and ITA, this, when you want to give advice, you have to summarize. Alright, plug in the figures from the computation and then justify. Okay, question. Wow, very good, ada tax incentive. It's common, alright, it's normal for me to have students, about 5 to 10 students that can actually get full mark for this topic. Alright, and this is the mark among the topic that is very easily to mark. Alright, I tengok figure, I dah tahu salah betul. Okay, but I won't do the marking. Alright, Dr. Hamimah will do the marking for your final exam, even though we actually prepared the question. Alright, but Dr. Hamimah will mark the paper. But the schema is from us. Makan je. Okay, next. Ada question from ITA, pioneer status? Tak ada. If no, then we go to the next topic, which is, what was the topic just now? Dah tak ingat dah. Topik tax 2. Indirect taxes and agriculture allowance. Right? Indirect taxes, of course lah, is going to be theoretical, I think. Right? Normally the understanding of the system. But I think that you also have to follow the guidelines, right? So I do not know. I don't cover that topic. All right. You may want to ask Dr. Sawa. All right. You can ask in the WhatsApp because she's not available today. Otherwise, she will join us. Agricultural allowance, of course, this topic is similar to your capital allowance. It's part of capital allowance. It's just that for those business in the agricultural industry. So again, you have to identify, number one is always what is the qualifying expenditure. Yeah, of course the table, I think that the table for agriculture allowance should be, I will have to check again, provided, right? Whether what is normally it's 50%, 50%, right? 50%, 50% or 100%. So normally you claim within 2 years only, right? So you must know your QE and what is your initial allowance, or is there any initial allowance? I don't think so. I'm not sure lah. Agriculture 50%, 50% like that, right? So there's no IA or AA lah, yeah. So there's no I letak so IAAA, so it's wrong, yeah. So it depends. Most of the time it's 50%, 50%. So you claim within 2 years only. But alright, the more interesting part in the agriculture allowance is the balancing charge, right? Why? Because if you dispose of your asset that you claim agriculture allowance within 5 years, everything will have to be clawback. All right, clawback means that everything will be treated as a as a balancing charge, all right? And you can either charge balancing charge everything that you have claimed in the year of disposal. So it means that you're going to have all your balancing charge that you have claimed earlier in the year of disposal, or you want to claim for a what do you call that? You want to spread the balancing charge into a few years back. All right. So how are you going to apply that when you have your balancing charge? So you want to spread backwards. Okay. So how much is given? So there should be an example on that. All right. You can also refer to public ruling on agriculture allowance. It's very clear. I like the public ruling. All right. That will help you to understand the topic better. Okay. So I have covered all the topics, I think. We have tax computation, tax incentive, RPGT, indirect tax, and agriculture allowance. Yeah, so any question? Or else we can dismiss the class. Oh, ada check. Indirect taxes. Okay. Thank you sangat. Huh. Any more?
Doctor, do we need to study on the question that you give or other tutorial question?
I gave you tutorial questions, right?
Or other examples for us?
Of course, but I've given you tutorial, so that will be on me. Other
Oh,
question, you can always look for the past year's question. It's available, right? Past year's question. You can also look into professional exam papers. Right? It's available. For example, ECCA and MIPA is always available. The past year's question. So that will help you a lot. All right. If you manage to get from them, from the website, all right, the past year's question, it will help you a lot. Maybe you can segregate among yourself how to get the past year's question. Right? If you can compile, that would be good. But now maybe you are studying for your exam. If you can just do one or two past year's question related to the topics that we have covered, right? That would be very, very good. How about the time allocation during the exam? I'm not sure. All right, you're given, I think, 3 hours, and look at the marks given. Okay, so do not spend too much time on a question. You have to allocate the time accurately. I'm not sure. Total mark is 100. All right, you have 5 questions, but there's one question maybe carry 30 marks. The other question carry 20 marks, and it's a mix. Right, it's not that 20 marks for each question. No, it's not like that. Right, uh, it's not given like that. Right, actually. So you have to be very strategic, right, to how to answer the questions within the limited time. Have you done your mock exam? Okay. So I think that if there is no more question, yeah, again, I wish you all the best in your final exam and your future undertakings. Um, I hope that the session today will benefit you, inshallah. And if you have any other question, right, you can always WhatsApp, and we'll try to help each other. All right. Other students will also help to answer the question. You don't have to rely on me only. Yeah, and Dr. Sawa. So with that, I thank you again.
Sorry, Doctor, I have a last question.
What question carried highest mark? I tak ingat lah. I I think it's corporate tax. Corporate tax. I don't remember. I have to flip the question now, but I can't do that now. Nanti salah-salah silap nampak you all soalan final exam. Other than that?
Doctor, I have a last question. For agriculture allowance, right? If the disposal is after 5 years, is there agriculture charge?
No. Then
No,
you
right?
do normal disposal lah.
So there is no withdrawal of the allowance.
No, no.
Okay.
You just compute your RE and then disposal value, whether be A or BC. Only if within 5 years you have to claw back.
And another one for tax computation, right?
Mm-hmm.
For business, they have zakat perniagaan, right? It's
Yes,
different from zakat for personal taxation, is it?
different. Zakat
Where do we
perniagaan.
deduct the zakat?
Okay, zakat perniagaan because you're doing for sendirian berhad or company. Alright, so the zakat paid by the company is zakat perniagaan. So that is, so when you have that zakat, you have to add back first the whole amount, then only minus against your aggregate income. And the amount to be given as a deduction against aggregate income is restricted to 2.5% of your aggregate income. So when you do your tax com, alright, most of the time your aggregate income will not be the right amount. All right, but you have to show me that your approved donation, you have to put maximum 10%. All right, restricted to 10% of your aggregate income, and your zakat is 2.5% of your aggregate income. So you have to show that. All right, even though the figure will be different, but you have to show your understanding on the concept.
Is it deducted from tax payable or where is it
No, no,
deducted?
no, no,
Because
no, 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 no. This is deducted against aggregate income. So after aggregate income, you have your current year loss, then you have approved donation, then only you have zakat. Then you have your total income or your chargeable income. Okay?
okay, thank you.
Other than that? Tak ada. Alright, I think that's all for today. Alright, thank you again for your participation. Thank you again for having this class. I'll see you when I see you. Alright? With that, Assalamualaikum and thank you, Doctor. Alright, thank you, everybody.
Thank you, Doctor.
Alright.